Interestingly, today, Federal Reserve announced a pause on their rate hike process because the inflation in the US is trending downwards. And on the other side, Bank of Canada reversed its course and they are starting another round of rate hikes because our unemployment data is low, GDP numbers are so strong, and the inflation is also spiking up again. So what do we get out of this? So basically, the gist of that video is the inflation never goes up and down in straight lines. So even though it is coming down in the US, it's the latest CPI reading saying 4%, but the 4% is still very high from its target, which is 2%. And if you look at the graph, historically, we have seen 4% in very rare occasions in the last 40-50 years. And if we look at the history, there were two important inflationary decades we have seen in 1940s and in 1970s, and both were different. So if you look at the 1940 scenario, this was the inflation driven by the war-related government spending. So the government wanted to spend a lot of money, so they printed a bunch of money, and Federal Reserve kept the rates at the minimum so that it doesn't cost government a lot of interest to spend that money. And then they did not increase the interest rate to bring down the inflation. They let the economy run its course, and when the government spending collapsed, the redevelopment, post-war redevelopment, actually absorbed that monetary inflation, and the inflation comes down naturally as part of its economic process. But in 1970, that was a different scenario. It was the monetary inflation because of the currency collapse when Nixon took dollar off gold standard. Back then, the government was not taking a lot of debt, right? It was the currency collapse situation, and Federal Reserve had to increase the rates up to like 18% to stabilize the currency. So that was a different scenario. So if we look at today, we have a combination of the two. We have a much higher level of debt, particularly by the government, and they needed to continue to spend the money by taking more debt. And if they increase the interest rate, that becomes very expensive for a government to survive. So what's going to happen? I think in the US, we will see the government will continue spending money as part of the debt ceiling issue. They are now going to issue $1 trillion worth of treasuries in the next few months. So the government spending will continue. That will drive most likely the inflation in the upward direction, because no matter what central bankers will say, hey, we are in control, we are trying to fight inflation, but the fact of the matter is there are certain elements in the economy which is not controlled by the interest rate hikes, like food, like fuel, like necessity, clothing, and everything that we need to live off our lifestyle. Those things are not really controlled by the interest rate. Yes, there are certain financial assets like house prices, financial assets, mortgage rates, that is going to be immediately impacted by the interest rate, but the necessities that we have in our common person's life is not pretty much controlled by the interest rate. So the fact of the matter is, no matter what they say, they are not really in control. The market will run its course, and then those prices will come down over time, purely because of the demand and supply situation. So I think 2020 is going to be an inflationary decade. We will see some ups and downs in terms of how the inflation is kind of trending, and it all depends upon the government policies. If the government is going to continue spending money by printing, by taking more debt, and the debt is going to be financed by the central banks, i.e. Federal Reserve in the US or Bank of Canada in Canada, this is going to be an inflationary process which is going to continue pressure on the currency. Now they can put down a different narrative in the media, like what Federal Reserve Chair was saying in his speech, that this is going to be a very hawkish tone and then we'll continue rising rates, we have to fight inflation. But I think in order to letting governments continue spending, they have to keep the rates a little bit lower. That's one option. The other option is, if they want to continue spending, they have to have access to the free money so that they can continue paying off the interest as well as continue spending the money. So I think all of these indications are going to show us that the decade of 2020 is going to be inflationary. Now this is going to be ups and downs, but I don't see, unless the governments are going to cut down spending like austerity and increase the taxes, which I think the politicians have no stomach to digest that, because it's a political suicide and it's a political profitable move to continue spending money in the economy from a government perspective. So that's what Milton Friedman said multiple years ago, and we are seeing this is being unfolded in front of our eyes. Anyway, let me know what you think about this. Put your comments down below. If you like this video, subscribe, hit the like button, and I'll see you in my next week video. Thank you.